welcome Mr. David Morgan.
Well, welcome everyone. It's always a check on your personality, I guess, to see how many people show up when you're the first speaker in the morning or if you're the last speaker at night. Is in those two time slots, you pretty much see who wants to hear you and who doesn't. So thank you for coming. I know it's a Friday morning, it's fairly early. My speech today is on precious metals outlook for 2014. And before I get started, I just want to do a little shameless promotion. I usually forget to pitch my newsletter, etc. It's part of the reason I'm here. I do have a company that is a speculation. I believe that speculations are money you can afford to lose. I probably have, to the best of my knowledge, I have the best track record of picking speculations and actually turning them into mining companies than anybody else in the business. It was easier to do over a decade ago because the people, there were so few to choose from, the people who held those properties held them for a reason. But moving on, this is a unique situation. Again, it's a speculation, but it has to do with recovery rates that are greater than anything in the industry right now, and it's environmentally friendly. And it's an environmentally friendly part of this speculation. So it's something I'll probably be writing about in a month or 2 months or 3 months, I don't know, but it'll be fairly soon. And the reason I'm saying all of that is to say this. There's some cards at my table that allow you to get the full-blown Basic Plus service that's like $300 a year for free, absolutely free for 30 days. So if you come by and get one of these little cards, or either a little bit of a postcard, you can slip in your wallet, go home, sign up when you feel like it, and you might be able to get that speculation. I believe in investing the way I do, where big money goes into big companies. Medium money goes into medium companies. And when we speculate when something does become a mine, we can buy it on the way up. But it's the way I trade the markets. The market has to show me what it's doing. I'm not going to tell the market anything. The market is much smarter than I am. So if the market's coming up and there's volume and there's support, then I go ahead and get in. And if it continues to grow, it's a growth situation, I can add on more. But to bet the farm on one of these storage stocks, you're going to lose your butt. I know I did it when I was in my 20s, and I'm a little older than that now. So anyway, enough of my lecture of the lecture. Let me get on to the precious metals outlook. So I do technical work. It's not my basic focus. Some months will show in the report. The Basic Plus service is where those that are technically oriented want to subscribe because it's my voice, my charts. I show you what's going on. It's not always charts. I look at the stocks we follow as well. But this is the most fundamental fundamentals. There's nothing more truthful in my view than the basics of technical work, which is connecting the bottoms. That's a major uptrend line. You can see that's a long-term chart on gold, and we're far from touching the major uptrend support. And even if we were to hit $1,000 goals, we would still, by definition, be in a major bull market. So I want to make that as clear as I possibly can, because there's a lot of people out there in the mainstream press, particularly, that talk about the fact that the bull market's over, the top is in, and on and on. No, it's not. Until we penetrate that major uptrend line significantly, we are still in a bull market. Again, we could go to $1,000 an ounce, bounce back up off of that line, and still remain in a bull market. I don't think I can make it clearer than that. As far as I'm concerned, I think the gold bottom is in. Probably, there's a lot of banks saying it's going to go to 1,000, as I just said it could. I doubt it. But more importantly than that, I put my neck out and we can chop it off here in the future, perhaps. Perhaps not. You see that lime green line there? That's called the key reversal. That was the 28th of June, 2013. That day, the price hit 1817 and went up to 2008 to close. It's called a key reversal for a reason. It's key. What's key about it is it hit a new low, the lowest low that is hit in a very, very long time. That was $18.17, and it probably traded one contract. Why? Because the short said that's low enough, I'm getting out, I'm covering, and they cover, which means what? Buying pressure, and that does what? Drives the price higher throughout the day to 2008. So to me, knowing how futures markets trade, knowing how markets work, and putting my life into this stuff, I really believe that's the bottom. So far, for 7 months, I'm right. Why? Because the market has never touched 1817 since that day. Does that mean that's good forever? No. I could be wrong. And just for you that want to know my thinking, I'll tell you. If we get under $19 and close under $19 3 days in a row on good size volume, I probably reconsider that bottom as being, tested or maybe reached. But again, that hasn't happened yet, okay? I'm on record. I said that's the bottom. Time will tell. So far for 7 months, I'm right. So I can look like a hero for now, and 3 weeks from now, you can call me up and tell me I'm wrong. Believe me, I'll know if I'm wrong. Okay, so support and resistance levels, I'm not going to talk about that. What I'm going to talk about is the government-adjusted, inflation-adjusted price for silver would be like $130, $140 an ounce. That's using their statistics, and their statistics are inaccurate. I think everyone in this room is sophisticated enough to be at a show like this. You're sophisticated enough to know this hedonic indexing, the substitution method, the forced low interest rates, and on it goes. The true adjusted price is much higher than that if we were to get to $50 an ounce. But to be absolutely clear, the $50 an ounce silver was a one-day event. So, we have to bear that in mind as well. I mean, to think that you can get out the exact high of a market is naive. We try to get in within a 20% of the bottom and out within 20% of the top. It's only an amateur's game to think you can get in at the exact bottom and the exact top. That has a lot to do with the way markets move. By the way, before I forget, sorry to interrupt myself, once I get done here, there'll probably be some questions, and I've got like a table over on the other side here on this wall. So if you have questions, just follow me out of the auditorium, and you can come by and see me. I don't spend a lot of time in the booth area, but I will be there right after this because I'll probably generate some questions. So moving on, this is the key to the kingdom, I call it, the bond market, debt markets. I mean, what is a U.S. bond? It's a promise to pay what? U.S. dollars, when? Sometime in the future. I mean, that's what it is. So if the dollar has lost 97% of its value since it was started in 1913, and you have a claim to have more of those in the future, what do you think the value of the bond is going to be? I mean, this is a massive, massive problem. And it's not just the United States, it's governments around the world. And really, if you want to be really absolutely honest and truthful, it's really the governments that have borrowed the money from the banking elite. I mean, the Federal Reserve is a private corporation, as we all know. And the U.S. doesn't print money. The U.S. borrows money that's printed by the Treasury, but it's borrowed from the Federal Reserve. And popular knowledge has it this is mostly European help. Fed, that is. Volatility, that's just a shot just to get used to it. As these markets, volatility is a barometer or a cardiogram, if you will, on the market. So if you have an erratic heartbeat, you've got probable potential heart attack situation. And that's what volatility is in the markets. It's uncertainty. You don't know what's going to happen. People running left, running right, running up, running down. They don't know. And you're going to see extreme volatility in the future. What we've seen already is very volatile, especially in the silver market and other markets. But that's nothing compared to what's happening. Gold, I like to look at technicals and fundamentals. I think fundamentals are more important than technicals, but they both work together in my view. And the picture on gold is pretty clear. Central banks sold gold from like the early 90s all the way up to about the financial crisis. Since then, after the financial crisis in 2008, they've been net buyers of gold. Now, as much as they've aligned gold in the mainstream press, watch what they do, not what they say. Because what they're doing is they're buying gold, and they're buying more gold, and they're buying more gold. And the big gold shift is going from west to east. It's going from the west into China. This is history repeating. Any country or nation state that has been at the top of productive capacity, what us Austrian school economists call true capitalism or true productive production, that's wealth. Wealth is when you produce something. So who's producing stuff? Well, China's producing stuff. And that chart's inaccurate. It's that the biggest circle there should be China now, and it is. But the gold is moving there, and it's the real gold, not the paper gold. So moving on to silver, talk silver a little bit. Coin sales have never been as high. I mean, they backed off a little bit last year, but for years and years and years, you can see that the average sale on silver coins was about 10 million ounces a year. And it's been in the last few years, you're 20 and 30 and 40 million ounces. And that's a drop in the bucket relative to the financial markets, but certainly the trend is clear that there are more and more people that are involved in the physical silver market. And that's just one sector that I realize, but I think you can project that with some assurance that there is more and more interest in the physical silver market now than there was, say, back 10 years ago. The correlation between gold and silver, I often get asked, well, David, should I buy silver, should I buy gold, or should I buy both? And there's all these misrepresentations about gold is greatly deflation, but silver isn't. And gold will protect you, but silver can't, and on, and what I call the gold centrist. The truth is, since 2000, when the gold bull market began, in 2003 September, that called the bottom of silver and began the bull market, these markets are about 85% correlated, which means they do the same thing 85% of the time. And silver is more volatile than gold. For that to be 100% correlated, the lines would have to match exactly. The only thing that's 100% correlated with gold is gold, okay? So they're very, very correlated. So you can pretty much rest assured, again, that if you buy silver, it's going to perform like gold. It'll probably go down further on the downs and higher on the highs. I think you should own both. I really do. But I think if you leave silver out of the equation, you're missing the boat because it has more potential, in my view, to go, and I can prove that because when the bottom was September 2003, the ratio is 80 to 1. It took 80 ounces of silver to buy an ounce of gold. Now it takes about 65. So that fact is a fact, it cannot be disputed. The only thing that can be disputed is did I count the bottom correctly or not, but it takes less silver. So silver has actually outperformed gold, even as we speak now, than gold. It's outperformed gold. Again, I think we should own both. All right, I'm going to bust into this fairly quickly. I wanted to give assurance to everybody. I wanted to be in a position to help everyone kind of reassure themselves of the fundamental facts, the fundamentals on gold. So I looked up this article that I found through my research on the internet, and it was Bloomberg had written this negative gold article. So I thought I'd do a point counterpoint. I mean, what they talk about in the first point was that, you know, storytelling's a big part, gold was no different, the storytellers never changed their tale, the dollar hit 3-year highs despite QE, which is true. Inflation was nowhere to be found. Using their numbers, if anything, deflation was a greater risk. My counterpoint, narrative has not changed, gold bugs are not. All paper money systems have failed, 100% guaranteed. The problem is not QE, inflation, or deflation. The problem is that risk is the false system itself. Thank you. So that's it. They never address this, and they never will. Second point they make, take note of the new investment products, and they have the ETF, derivative products, gold only, trust, etc. There's lots of sales jobs out there. Anyone can be a gold investor now. Again, I agree with that. That's their point. What's my counterpoint? These products allow Wall Street and others to pretend to offer gold, when in fact, for the most part, these paper products offer a distraction and allow for more methods to manage the markets. Because a piece of paper is not a piece of gold, but they keep fabricating these quote-unquote gold investments. And people are lazy or unsophisticated. So the reason you own gold is because it's outside the financial system, not that it's in the financial system. Third point, ignore history at your own peril. Everything eventually becomes a trade. So they're talking about gold has gone up and down and up and down and up and down. Well, from that perspective, yeah, that's true. But so what they're really saying is, you know, don't hold it long term because, you know, it's going to move up, it's going to move down. My point is, couldn't say it better. History has taught us over and over that those that put their faith in a false system, paper money, pay a very high price. Yes, prices vary, but currencies fail. Thank you, Bloomberg. Now, I just want to be clear on my position here. When I wrote the 10 rules of investing for silver, and applies to gold, I said, look, 10% is probably enough. I mean, to have 10% gold coins or a mix of gold and silver coins is plenty for most people. That means you have 90% of your assets available to you. You have rental properties or stock investments or bonds if you trust them, or master limited partnership, on and on. I know the investment markets, okay? But what I'm saying is, if you don't have something that's outside the financial system and the currency fails, or is failing, or there's a bank run, or whatever, these things that are at the tail end, and these are unlikely events, but I believe and have my whole life that in my lifetime it's going to happen. And it doesn't mean the end of the world. What it means is you've got protection. So that's what I want to be clear about. I've never told anyone to all your assets in gold or to sit in a non-productive asset or anything like that. When I say I want you to own gold and silver, I mean the real stuff for the reasons I'm outlining. Fourth point, leverage. History teaches us any investment purchase with credit always runs the risk of margin calls. Here I agree. Make certain your core position is real physical and you can put it in your hands. Real gold and silver coins are the only monetary asset completely outside the system, as I just said. Maintain, fifth point, situational awareness. Think of the big picture, get a 30,000-foot view, you fly in an airplane looking down. Gold investors came to believe that bad economic news has become permanent, but cycles eventually turn. My counterpoint, here we agree. Bloomberg making a point to get out of gold because the situation has changed. Our view, has the situation changed? Let me ask you to answer that for yourself. Instead of Bloomberg telling you what to think, why don't you think for yourselves? Took one of these tests. I'm digressing here slightly, but my friend sent me this thing and you test your personality. Guess what? I came out as an independent thinker. How rare. All right, 6, the danger of one-way trades. Point. What would make you reverse your biggest present holding? What facts or situations force you to change your views and sell? The answer to the question is nothing. You have taken a huge devastating flaw to your point of investing or your approach to investing. Again, this begs, look at the individual. Do you have a 10% allocation of precious metals? So in other words, they're saying don't put all your eggs in one basket, and you've got to be aware of the situation and move in and out of the markets. And I agree with some of that, but what I'm saying again, as I said earlier, is that you really want to allocate a certain portion to a fail-safe, no-lose situation. And by the way, if you got into gold and silver when we were pounding the table at the beginning of this market, even today's prices, you'd be up substantially in real terms. I mean, that's a fact. But I also believe that this bull market is far from over because we still have so many factors involved in the system. What's built into the price already, to basically say, look, the price is up already. There's all these factors that are already built into the market. And my counterpoint to that is certainly 13 years in the bull market is far from being in the beginning. Further, there's more risk, and I admit that fact. But what's not built in the price already, all the promises to pay by governments globally. In other words, the accounting for the mismanagement by governments has not been priced into gold yet, and it is still undervalued on almost any metric you care to use. So that's my point. Because of that fact, I'm not going to sell gold. I'm up in real terms. But there's no way I would do it now, unless I had to. What are the fundamentals of gold? This one cracks me up. Their 8th point. Gold has no fundamentals. What is traditionally called fundamental analysis determines a company's cash flow, revenue, and earnings. Commodities have none of these things. Here we disagree. Going back to our fundamental argument, but paper money has survived for 1,000 years. None. Gold isn't a business. I mean, I think it's embarrassing for Bloomberg to say gold is supposed to be a business. It said at the last line, it's a commodity. Of course it's a commodity. It's the most cherished commodity for thousands of years that the people have decided has value. Gold's not a business. What gold is certainty. Sure, the price goes up and down, but remember, you've got to be able to think. If I hold an ounce of gold up here, that has the same mass always and everywhere throughout the universe for eternity. Okay? That's something that's certain. What isn't certain is how many pieces of paper on any given day somebody somewhere is willing to exchange for that. Right? So you gotta think. You gotta think critically. You gotta think through these things. Again, does that mean you put all your money in gold? Of course not. End of the world tales. More than any other investment, gold seems to involve a stream of fantastic tales of imminent societal collapse. guilty as charged. I mean, I've been reading, my mentors, Harry Brown, Jim Dines is still around, many of these guys, Vern Myers, they have talked about societal collapse, and not as a main feature, some have, but it's true. And I've been studying the markets, particularly precious metals, for over 40 years. Societal collapse is part of it. However, to dismiss it entirely is as faulty as betting on it entirely. A balanced approach serves you best. Remember, gold is up in real terms without any collapse. What I wanted to do, and I didn't get around to, is I wanted to put about 3 or 4 slides in after this slide showing, the masses in Greece, in Italy, in the Mideast, because it is showing signs of collapse. The Wall Street, Occupy Wall Street. I mean, there are people that are taking the streets, Argentina, right now. So to dismiss it, we're Bloomberg, and just dismiss these guys, I don't think you should. I'm not forecasting it's imminent. I'm not forecasting that it's everywhere. I'm not even saying, but it's obvious that it is taking place in some areas. And to just dismiss it because somebody tells you to, again, don't let anyone do their thinking for you. Think for yourself. And look at the disparity in this country that's been going on the last several years between the people that are making more money and the people that are making less, and how many people are just living hand to mouth, paycheck to paycheck. And then their final point 10, attacking the skeptics. And they go through here and talk about the zealots and how much venom the zealots have. And I think there's some validity to their point. And my counterpoint to that was, here it comes to belief and history. Do you believe the paper paradigm, or do you think the financial system experienced a crash in 2008 and that the real issues have only been papered over? It's a question for you to think about. I've made my own thoughts. I write about it every month. I take your questions. I do interviews. I do shows like this. But I'm not here to think for you. I'm here to stimulate thought. History clearly shows that gold is the last man standing. This is current history. Look at what happened to the Russian ruble. Look at what happened to the brainiest guys that got a Nobel Prize for their economics work, long-term capital management. I used to go around showing their feature film called Trillion Dollar Bet. It's the first film that I know of that had the word trillion in it. They made a $1 trillion bet, betting on their math equation, the tail end of the curve would never happen. Human behavior cannot be predicted 100% of the time. Can be predicted probably part of the time, or with 80% accuracy, but 80% isn't 100%. So look, we've had the Russian ruble fail, we've had the Thai baht fail, we've had the Argentina failure twice, once in 2000, it's taking place again right now. And of course, who in this room doesn't know about the Zimbabwe dollar? And by the way, if you have a chance, just type in Zimbabwe or Zimbabwe dollar David Morgan, you'll probably get a interview that I did on how rapidly that Zimbabwe dollar went from $1 Zimbabwe to $1 US being equal to where the $100 trillion never got circulated. It's been printed, and I have some, but it failed before they're able to get that to the street. So what is the future of the US dollar, question mark? No one knows exactly. We know that it's lost 97% of its value since 1913. We know it's only $5 to get a Starbucks, I mean, I'm old enough to know, what it was like in my beginning, talking to a young man in the back there. I mean, when I started working as a degreed engineer, I got $6 an hour. Now the minimum wage is what, $7.50, or I think it's $8 in Washington State where I'm at. So this is several years later. I'm not in my 20s anymore. But still, that shows you the insidiousness of inflation, how it creeps up and creeps up and creeps up. So again, I'm going to be leaving. I'm going to go in the back. I'm sure you might have some questions. If not, I'll be there from time to time. Take one of those cards. If you're interested in my work, you can get it for free. Remember, gold is a universal prize in all countries, all cultures, and all ages. That's from the ascent of man. I believe that. Doesn't mean, again, to put all your money in gold. I think the silver is going to actually outperform gold. That's the website. You can get on there. You also get our free reports if you get to our website. That's a bad hair day, but that's what the front of the report looks like. Those are some of the books that I'm translated into Chinese and German, by the way. And again, come on by. So it's been a pleasure. Hopefully you've had a good time. I know I have. Thank you for coming.